You are about to hear a number that will change how you think about health insurance in 2026. The average unsubsidized Obamacare premium is now $741 per month. That is up $122 from last year, a nearly 20% jump. But here is the number that should really grab your attention. For the millions of Americans who lost their enhanced subsidies at the end of 2025, their monthly premium payments more than doubled overnight, from $888 to over $1,900 per month. That is over $22,000 a year for health insurance. And yet, right now, someone sitting in the same city as you, with the same age and the same health status, might be paying just $200 per month for a private plan. The difference is not luck. The difference is knowing the difference between Obamacare and private insurance. And today, I am going to lay out the real numbers for 2026 so you can decide which one saves you money. By the end of this video, you will know exactly how Obamacare plans and private insurance compare on monthly premiums, deductibles, network access, and coverage for pre-existing conditions. I will give you the specific income limits that determine whether you qualify for subsidies, the new 2026 out-of-pocket maximums, and the real cost of a silver plan versus a bronze plan. I will also walk you through the pros and cons of each option for different types of people, from young and healthy to self-employed to families with chronic conditions. And I will touch briefly on how the U.S. system compares to the UK and Canada, so you have a complete picture. By the time we are done, you will know exactly which path is right for you. Let me start with the most important change for 2026. The enhanced premium tax credits that were introduced during the pandemic and extended through 2025 and expired at the end of last year. That means for 2026, premium subsidies are once again only available to households with incomes between 100% and 400% of the federal poverty level. For a single person, that means an income between $15,650 and $60,240. For a family of four, that means an income between $32,150 and $128,600. If your income is above that threshold, you receive zero subsidy. You pay the full unsubsidized premium. And if your income is $1 above the cutoff, you lose all of your credit. There is no sliding scale. It is all or nothing. The impact of this change has been dramatic. According to data from the Centers for Medicare and Medicaid Services, the average net premium after subsidies across the marketplaces in 2026 is $178 per month, up from $113 in 2025, an increase of nearly 58%. The average unsubsidized premium is $746 per month, up from $612. And for the roughly 7 million Americans who lost their subsidies entirely, their premiums more than doubled. In fact, research from KFF shows that average annual premium payments for subsidized enrollees may rise from $888 in 2025 to $1,904 in 2026, a 114% increase. That is not a small bump. That is a financial earthquake. Segment 1. Let me break down what you actually get with an Obamacare Marketplace plan. First, the good news. Every ACA Marketplace plan is required to cover 10 essential health benefits, including emergency services, hospitalization, prescription drugs, mental health care, and preventive services. There are no annual or lifetime dollar limits on coverage. And perhaps most importantly, Marketplace plans are guaranteed issue. That means you cannot be denied coverage or charged a higher premium because of a pre-existing condition. If you have diabetes, cancer, heart disease, or any chronic condition, the ACA Marketplace is your safety net. Insurers cannot turn you away. They cannot charge you more. The trade-off is cost. Unsubsidized ACA premiums are significantly higher than private plans for healthy individuals because the risk pool includes everyone, regardless of health status. The plans are also structured into metal tiers. Bronze plans have the lowest monthly premiums, but the highest out-of-pocket costs when you need care. On average, a bronze plan covers about 60% of healthcare expenses, leaving you to pay the remaining 40%. Silver plans cover about 70%, gold plans cover about 80%, and platinum plans cover about 90%. For 2026, net premiums after subsidies are projected to increase by an average of 65% for bronze plans, 121% for silver plans, and 80% for gold plans. That means even subsidized enrollees are feeling the pinch, text meant too. Now let me talk about private health insurance, also known as off-exchange or U65 private plans. These are plans sold directly by insurance companies or through agents, not through the ACA Marketplace. They operate under different rules. First, private plans are medically underwritten. That means the insurer reviews your health history before deciding whether to offer you coverage and at what price. If you are healthy, you will likely qualify for standard or preferred rates, which can be significantly lower than ACA premiums. For healthy adults, earning above the subsidy threshold of $60,240 for an individual, private plans are usually 20 to 50% cheaper than unsubsidized ACA plans. For a 40-year-old in good health, a U65 private plan might cost between $220 and $360 per month, compared to $305 to $470 for an unsubsidized ACA plan. Over a year, that is a savings of over $1,000. The trade-off is coverage. Private plans are not required to cover all 10 essential health benefits. Some may exclude maternity care, mental health services, or prescription drug coverage. They can also exclude pre-existing conditions. If you have a chronic illness, you may be denied coverage entirely or offered a policy with a rider that excludes coverage for that condition. For this reason, private plans are best suited for healthy individuals and families who do not have significant ongoing health issues. They are also available year-round. Unlike ACA plans, which are only available during open enrollment, unless you have a qualifying life event, U65 private plans can be purchased any day of the year with coverage starting as soon as the next business day. For self-employed professionals, gig workers, and early retirees, that flexibility is a major advantage. Let me give you a real-world example from 2026. A 45-year-old self-employed consultant in Florida earning $85,000 per year is above the subsidy threshold. He does not qualify for any premium tax credits. His full-price ACA Silver plan costs about $820 per month. But because he is in good health with no chronic conditions, he qualifies for a U65 private PPO plan at a significantly lower monthly rate. His private plan also gives him access to a nationwide PPO network with no referrals needed. That is a real savings of over $400 per month, nearly $5,000 per year. Not only does it save him money, but it also gives him more flexibility and better access to doctors. SMIT 3. Let me give you a side-by-side comparison of the two options across key categories. On monthly premiums for a healthy individual above the subsidy threshold, a U65 private plan typically ranges from $155 to $480 per month, depending on age. while an unsubsidized ACA plan ranges from $200 to $750 or more. On deductibles and out-of-pocket maximums, private plans and ACA plans can be quite similar, but ACA plans tend to have standardized cost sharing based on metal tiers. For a family of 4 in 2026, the lowest cost bronze plan jumped from $1,267 per month in 2025 to $1,667 per month in 2026, with deductibles rising from $6,500 to $7,500 and out-of-pocket maximums climbing from $9,200 to $10,000. That is a significant increase in both monthly and annual costs. On network access, ACA plans are often HMOs or EPOs, which require you to stay within a local network and typically require referrals to see specialists. Private PPO plans, on the other hand, offer